I'm Sarah Borkson-Keto here at the Hay Adams Hotel in Washington, D.C. for REITs 2019 CEO Forum and Advocacy Day. Joining me today is Ross Smotrich, Managing Director at Barclays. Welcome, Ross.
Thank you very much, Sarah.
So industrial REITs have benefited from tremendous tailwinds over the last few years. Looking ahead, what do you see as some of the main challenges in order to maintain that level of growth?
There's no question that industrial REITs have benefited from tremendous tailwinds. You just have to look at the returns. They put up double-digit returns over each of the last couple of years. In contrast, the RMZ has been flat to down. I think it's being driven by a couple of things. First, supply and demand dynamics. Real estate fundamentals have been very, very strong. But perhaps most importantly, investor sentiment has been incredibly positive. On the fundamental side, demand is driven by everything that everybody knows. It's driven by e-commerce, the last mile, building parallel supply chains, economic growth. The supply side's been very, very disciplined as development economics are tougher to make work late in the cycle. And investor sentiment, as I said, seems to get it. The generalist investor, which is the incremental dollar, seems to really understand what's driving e-commerce and, by extension, industrial real estate. So to answer your question, I think the challenges to maintaining that growth will be, number one, will fundamentals remain strong? Will they continue to favor the landlord? We tend to believe they will, but it is getting more challenging late in the cycle. Growth, by definition, is going to slow a little bit, and it is tougher to make new expansion work, either by acquisition or by development. That being said, I do tend to believe that the fundamentals will remain really quite strong compared to other kinds of real estate. We remain constructive on the industrial sector. And I think the thing that many investors are not focused on, but very, very important, is that these are becoming large operating companies. And as a result, they're going to use their size and scale to drive better margins, to drive better growth. They're going to use things like data analytics in order to anticipate where the markets are going. And I think those are the things that will continue to help drive growth, albeit perhaps not as robust as the last couple of years.
Great. And turning to the retail sector, where do you see certain pockets of optimism, and how do REITs fit into that picture?
A lot of people are looking hard for pockets of optimism. We actually think we see some. I think, in a nutshell, the retailers increasingly seem to get it. And what do I mean by that? I think it's a little bit like politics. Wherever there's rumor and innuendo, there's a little bit of truth. And there's no question that retail is challenged, and it's changing. But some of the better retailers are figuring out how to be merchants again, how to remain relevant. Their business models are changing. You just have to look at the native or the digital retailers turning to real estate, for example. You can look at Walmart buying Jet.com and competing head-on with Amazon to get a sense of how retail is adapting, evolving, and I think that is a sign of optimism. The implication for REITs, of course, is that as retail as an industry evolves, so too will retail real estate. And you're going to see formats change. You're going to see the same bifurcation as you are between the retailers, between haves and have-nots. So some retail real estate is going to go away, but retail real estate that has value by virtue of access to demographic wealth and population density will remain relevant. And I think that those companies, those retail real estate companies that understand and are able to move the needle and redevelop their real estate to keep it relevant and current, those are the companies that you want to be investing in. So I don't believe in the retail apocalypse. I don't think retail is dead. That's been the narrative for the last couple of years. But I think retail will evolve, and smart investors will figure out how to take advantage of that evolution.
And taking a step back, how would you describe sentiment across the broader REIT industry, and how much are investors focusing on the length of the current cycle?
So to be fair, I think that investor sentiment probably is somewhat mixed. But I think a nuanced answer is that you have to look at the various constituencies and what are they thinking. So roughly 40% of the stocks are owned by plan sponsors, pension funds, sovereign wealth. They're long duration investors. They continue to like real estate, and they continue to like publicly traded real estate. The dedicated REIT world, roughly 20% of the shareholder base, similarly is, I would say, constructive, probably pragmatic. We are a little bit late in the cycle, so they're being discriminating in how they invest. But the real variance here, the variable to look at, are the last 40% of the investors. And those are the generalists, the non-dedicated financial buyers. And it's fair to say that their sentiment over the last several years has been very, very mixed. And they are the incremental dollar, and that's why it's so important. So sentiment has been mixed because they're concerned that we're late in the cycle, they're concerned that rates are going up, and perhaps most importantly, they see better investment opportunities elsewhere in the broader stock market. Our sense is that's starting to change. We saw it in December, we saw it a little bit in January, as rates started to stabilize a little bit, but as global growth and earnings growth in the S&P started to slow a little bit, the markets got a little bit volatile and investors turned a little bit defensive. And I believe that's going to be very, very sustainable and probably works to the benefit of REITs as a defensive total return alternative.
Ross, thank you so much for joining us.
Well, thank you very much for having me.
And for more news and information on all things to do with REITs, be sure to visit REIT.com.